Bitcoin has been on a steady climb since the end of 2022. And if you feel like you've missed the boat on BTC, then Bitcoin mining stocks might offer you a second chance.
Second chance.
A second chance.
A second chance.
But that begs the question, which Bitcoin miners are actually legit, and how high could their stocks realistically go? Well, today we're diving into 5 Bitcoin mining stocks, looking closely at each company's history, mining power, and strategy to find out. My name is Guy, and this is a video you can't afford to miss. Okay, now, before we get started, it's important to note that nothing in this video is financial advice. It's just educational content intended to inform you about publicly traded Bitcoin mining companies. So please consult your financial advisor before investing into anything. Now, you might be wondering, why even bother with Bitcoin mining stocks when you can simply buy BTC? Well, there are actually quite a few reasons why choosing mining stocks could make sense. First and foremost is simplicity. Let's face it, buying, holding, and securing BTC directly can be intimidating for some, especially those newer to crypto. Mining stocks, on the other hand, trade just like regular shares, meaning you can easily invest using traditional brokerage platforms without worrying about private keys, wallets, or blockchain fees. There's also a regulatory angle to consider. Many investors steer clear of crypto because regulatory uncertainty makes them uneasy. Stocks don't carry nearly the same regulatory question marks, making mining stocks a potentially safer bet for more conservative investors, or simply for those who prefer to stay within the bounds of traditional finance. Mining stocks also hold an advantage for retirement planning. Not only does this give you exposure to BTC indirectly, but many mining firms generate steady cash flows, adding a layer of financial stability that's not possible from purely investing into BTC, which doesn't earn a cash flow. That's why mining stocks sometimes outperform BTC itself during bull markets. Anyway, before we dive into our first Bitcoin mining stock, smash that like button if you're enjoying the video so far. And if you haven't already, subscribe to the channel and ping that notification bell so you won't miss our next upload. Now, the first Bitcoin mining stock worth highlighting is Mara Holdings, ticker symbol MARA. Founded in Florida in February 2010 as Marathon Patent Group, the company began investing into Bitcoin mining equipment in 2021, even setting up a joint venture with a coal plant in Montana to power a Bitcoin data center. Shortly thereafter, it rebranded to Marathon Digital, clearly signaling its pivot towards digital assets. In 2024, the company simplified its branding even further to Mara Holdings. And since then, Mara has focused on building one of the largest Bitcoin mining operations in North America, while making an effort to keep things environmentally friendly. The company primarily uses renewable energy and employs an advanced liquid immersion cooling system, which in simple terms involves dunking its mining rigs in a special non-conductive fluid to keep them cool. Now, since Mara turned to Bitcoin mining, its size has grown exponentially. In fact, Mara is now the largest publicly traded Bitcoin miner by mining power, commanding more than 54 exahashes per second as of Q1 2025. What's an exahash, you might ask? Well, Bitcoin mining involves powerful computers guessing cryptographic puzzles in a process known as hashing. 1 exahash means 1 quintillion guesses per second, meaning Mara's miners can perform over 54 quintillion guesses per second. In layman's terms, they're hella quick. And perhaps most notably, in July 2024, Mara announced that it would adopt a full HODL strategy, meaning the company wouldn't sell any of its mined BTC to cover operational costs. And since then, Mara has actually doubled down, regularly buying additional BTC from the open market to grow its reserves even faster. In March this year, Mara announced a $2 billion stock offering to, yep, you guessed it, buy even more BTC. And this follows similar moves last year, including a $1.5 billion at-the-market stock offering and a $1 billion convertible bond sale, both aimed at boosting its BTC reserves. According to Bitcoin treasuries, Mara has been adding BTC nearly every month in 2025. And this kind of aggressive accumulation isn't limited to Mara either. Many miners have now started taking the same approach, choosing to hold on to their BTC instead of selling it to fund operations. Obviously, a Bitcoin mining company not selling its BTC can significantly boost its long-term value, especially considering the amount of BTC Mara is mining. In Q1 2025 alone, the company mined 2,286 BTC, bringing its total holdings to more than 48,100 BTC, second only to Michael Saylor's Strategy among publicly traded companies.
Apologies for the interruption, folks, but I very quickly want to tell you about the Coin Bureau deals page. Now, if you're interested in things like discounts on hardware wallets, money off trading fees, and exchange sign-up bonuses, then the Coin Bureau deals page is absolutely the place that you need to check out. The link is in the description below. These are some of the best deals and promos in all of crypto, so check it out when you have a moment. Okay, enough from me, back to the video.
Okay, next up on the list is Riot Platforms, ticker RIOT. Now, Riot Platforms didn't start off in crypto. The company originally operated as a biotech firm under the name BioOptics from 2000, but in 2017, during the crypto bull market frenzy, it rebranded to Riot Blockchain, despite initially having no clear connection to crypto. Shortly thereafter, Riot shifted into Bitcoin mining, making multiple acquisitions, including Kairos Global Technology in 2017, and adding over 1,200 Bitcoin mining machines to its fleet. In May 2021, Riot further expanded by acquiring Whinstone US, the operator of North America's largest Bitcoin mining facility located in Rockdale, Texas. This $651 million deal significantly boosted Riot's mining capacity, turning it into one of North America's top Bitcoin miners. Then, in 2023, the company dropped the word blockchain from its name, rebranding simply to Riot Platforms. And today, Riot stands as the world's second largest Bitcoin miner behind Mara. In Q1 2025, Riot managed to mine over 1,530 BTC, which equates to roughly 17 Bitcoin per day, and had a total mining power of approximately 34 exahashes per second. Currently, the company holds over 19,200 BTC on its balance sheet, making it the fourth largest publicly traded BTC holder. And, like Mara, Riot has historically sold small amounts of mined BTC to fund its operations. However, in late 2024, Riot stepped up its BTC accumulation by purchasing an additional $510 million worth of BTC to significantly expand its treasury even further. Riot is also diversifying its business by pivoting some mining capacity towards artificial intelligence. This trend has become increasingly popular among Bitcoin miners given the potentially higher profits in AI and high-performance computing compared to Bitcoin mining alone. However, the catch is that ASICs, the specialized machines used for mining Bitcoin, can't simply be repurposed for AI, as each type of operation has entirely different hardware requirements. And you can learn more about the Bitcoin mining industry as a whole by checking out the video right over here, by the way. Now, the last thing worth mentioning is that Riot has sold large amounts of BTC in the past. In fact, the company recently made headlines when it sold 475 BTC, its first BTC sale in 15 months, to reduce reliance on equity funding and minimize shareholder dilution. Okay, moving on. The third Bitcoin mining stock you should have your eye on is CleanSpark, ticker CLSK. And like many of the other companies covered today, CleanSpark didn't start out in crypto. It was actually founded all the way back in 1987 as Smart Data Corporation, initially focused on alternative fuels research. After lying dormant for several years, it resurfaced in 2014 as Cango Inc, pivoting into renewable energy solutions. Then, following a merger in 2016, the company officially adopted the name CleanSpark, specializing in microgrid technology to efficiently integrate renewable sources like solar and wind power. CleanSpark officially stepped into Bitcoin mining in 2021 when it acquired ATL data centers and merged its renewable microgrid solutions with the energy-intensive process of BTC mining. Since entering Bitcoin mining, CleanSpark has scaled aggressively, increasing its mining power significantly to over 40 exahashes per second as of Q1 2025. Thanks to this mining fleet, CleanSpark mined more than 7,000 BTC throughout 2024 alone. Now, unlike some of its peers, CleanSpark typically sells small amounts of mined BTC to cover operational costs. That said, though, it has still managed to build a substantial treasury, holding over 12,100 BTC at the time of recording, all of it mined in-house. It's also worth noting that CleanSpark has explicitly rejected the idea of raising capital to purchase BTC on the open market, arguing it can mine BTC far cheaper than buying it outright. This approach has led CleanSpark to aggressively expand operations, especially during the depths of the recent bear market. The company took full advantage of significantly discounted ASIC miner prices, which tend to surge 3 to 5x during bull markets. In fact, in January 2024, CleanSpark announced plans to purchase up to 160,000 additional mining rigs. This acquisition was followed by several strategic expansions, including the purchase of 7 mining facilities in Tennessee. And thanks to these moves, CleanSpark has driven its mining costs down to roughly $34,000 per BTC, making it one of the most cost-efficient miners in the industry. Interestingly, CleanSpark has remained firmly committed to its pure-play Bitcoin mining strategy, deliberately choosing not to diversify into AI or high-performance computing like some of its competitors. CEO Zach Bradford explained that focusing purely on Bitcoin mining allows CleanSpark to realize quicker returns, since mining infrastructure can become operational within months, unlike AI-focused data centers whose setup times can stretch into years. Now then, the fourth Bitcoin mining stock worth taking a look at is Hut 8, ticker HUT. Founded back in 2017, it's one of North America's oldest Bitcoin miners and was the first crypto-focused company listed on the Toronto Stock Exchange in 2018. Initially, the company built its reputation on industrial-scale Bitcoin mining facilities and currently operates with a mining capacity of around 9.3 exahashes per second as of Q1 2025. Historically, Hut 8 has been well known for its full HODL approach, rarely selling mined BTC and accumulating reserves instead. This strategy started quite early. In fact, back in 2021, the company had already surpassed 5,000 BTC held in its treasury, making it one of the earliest adopters of the full HODL strategy among publicly traded miners at the time. However, this stance shifted slightly after the merger with US Bitcoin Corp in 2023, creating Hut 8 Corp. The merger led the company to adjust its strategy somewhat, opting to sell some mined BTC to fund operational costs. Yet, despite this minor shift, the company continued to expand its BTC reserves significantly. In December 2024, for example, it acquired an additional 990 BTC, pushing total holdings beyond the 10,000 mark, ranking it among the top 10 largest publicly traded BTC holders. And if you're curious about which other companies have been stacking BTC, then be sure to check out our video covering exactly that right over here. Now, interestingly, the firm recently announced the spin-off of its Bitcoin mining operations into a subsidiary called American Bitcoin, partnering with investors that include Eric Trump and Donald Trump Jr. American Bitcoin is now home to the majority of the company's ASIC mining fleet and is aiming to become one of the largest pure-play Bitcoin mining companies worldwide. At the same time, Hut 8 Corp has also expanded into high-performance computing and AI-focused data centers, receiving approval in January 2025 to construct a $2.5 billion AI data center facility in Louisiana. In terms of mining performance, meanwhile, it produced 199 BTC in Q1 of this year, which is significantly lower than the other companies covered today. This reduced production reflects the fact that it currently has the lowest mining power among the miners we've discussed. Okay, now the final Bitcoin mining stock you should be watching is Cango Inc, ticker CANG. Cango too originally had nothing to do with crypto. It was founded in 2010 as a Chinese automotive financing and services company, connecting car buyers with dealers and financial institutions. In late 2024, however, Cango pivoted significantly into Bitcoin mining, becoming one of the industry's largest participants. In November 2024, Cango launched its mining operations after investing approximately $400 million into Bitcoin mining equipment, acquiring around 136,000 mining rigs. By the first quarter of 2025, Cango had already achieved a mining capacity of roughly 32 exahashes per second. And during Q1 2025, Cango mined a total of 1,541 BTC, bringing its current BTC treasury holdings to over 3,100. Notably, Cango has chosen to adopt the increasingly common full HODL strategy, refraining from selling any mined Bitcoin to cover operational expenses. And yet, despite its substantial scale, Cango's cost per BTC mined remains notably high, around $70,600 per BTC as of Q1 2025. Now, this figure is significantly higher than many competitors and could become a major headwind during the next bear market, as lower BTC prices could severely squeeze margins or even render operations unprofitable. Now, this elevated cost structure is likely due to operational factors such as higher electricity rates, less optimized mining facilities, and higher hosting and infrastructure costs. Additionally, given that Cango pivoted into BTC mining only in late 2024, operational efficiencies may not yet be fully realized compared to more established miners who've spent years refining their cost controls. In a move aimed at fully transitioning into Bitcoin mining, Cango recently finalized the sale of its traditional auto financing business for roughly $352 million to a firm associated with Antalpha, an affiliate of mining hardware giant Bitmain. This transaction effectively positions Cango as a publicly traded proxy of Bitmain, which is the largest manufacturer of Bitcoin mining machines. Looking forward, Cango has stated plans to further increase its mining capacity by an additional 18 exahashes by July 2025, which would bring the company's total mining power to approximately 50 exahashes per second. Now, this is significant because it would place Cango among the largest publicly traded miners in the industry. So, all of this begs the question, how exactly should you go about investing in Bitcoin mining stocks? Well, I'll start by reminding you that none of this is financial advice and is purely educational. That said, though, let's start by looking at the historical price action of these Bitcoin mining stocks. If you examine mining stocks that were around back in the 2021 cycle, you'll quickly spot some similarities. Most notably, many mining stocks experienced two major rallies in 2021, just like BTC, and subsequently found their bear market bottom towards the end of 2022, just like BTC. Essentially, they tracked BTC very closely and even outperformed it at times during the 2021 bull run. However, since then, none of the 5 stocks we've covered today have managed to reclaim their previous all-time highs, even as BTC itself has surged past its old peak. In other words, that strong correlation miners once enjoyed with BTC has notably weakened over time. The question is, why? Well, we think there are 2 key factors at play here. The first is that back in 2021, BTC itself wasn't readily accessible to many traditional investors. Today, though, it's a very different story. With spot Bitcoin ETFs now available in the United States, traditional investors can easily get BTC exposure, meaning there's far less need to get indirect exposure through mining stocks. The second factor is publicly traded companies like Strategy, formerly MicroStrategy, that have been accumulating BTC. Thanks to Michael Saylor's aggressive Bitcoin accumulation strategy, his company now holds over 500,000 BTC and counting on its balance sheet. As a result, MSTR has effectively become the go-to stock for investors seeking leveraged Bitcoin exposure, though it's not the only one. And this shift likely explains why so many mining companies, including those we've discussed today, have recently adopted the full HODL strategy, trying to emulate the appeal of companies like Strategy by holding all their mined BTC rather than selling it. So, how should you actually approach investing in mining stocks today? Well, it's similar to building a crypto portfolio. Diversification is key. While it might be tempting to simply go with the largest player in the space, like Mara Holdings, putting all your eggs in one basket is rarely a good idea. Instead, it may be smarter to diversify your portfolio across multiple mining stocks. perhaps allocating larger positions to established players like Mara and Riot, while keeping smaller positions in more speculative companies like Hut 8 and Cango. Another solid alternative could be going for a mining-focused ETF, such as the Grayscale Bitcoin Miners ETF, which holds a diversified basket of miners. And finally, let's address the big question. Can mining stocks realistically outperform BTC itself in this cycle? Well, the short answer seems to be probably not. Considering that most mining stocks remain roughly 70 to 80% below their 2021 all-time highs, it would require significant capital inflows for them to revisit those highs and outperform BTC. And given the ease of getting Bitcoin exposure through the spot ETFs and strategy's dominance, a repeat of their past outperformance seems unlikely. That said, given their significantly smaller market caps, even modest speculative inflows could lead to considerable price increases. Just consider Strategy's current market cap of over $100 billion when compared to Mara's market cap of roughly $5 billion. This huge difference means it would take much less investor interest to push mining stocks significantly higher. However, it remains to be seen if they have the potential to outperform good old BTC, like was the case in the last cycle. Though perhaps all that's needed is some more animal spirits. And if you're curious about other crypto stocks that could have serious potential, then be sure to check out our dedicated video on that very topic right over here. Okay, that's all from me for today. Thank you all so much for watching, and I'll see you next time. This is Guy, over and out.